Hey, I hope you're doing great. Today we're diving into a complete Python code that allows you to backtest your trading bot strategies and analyze the results in depth. I've developed this code to be as user-friendly as possible, making it very easy for you to implement your own strategies. This code is also fully furnished. You can choose longs, shorts, stop losses, take profits, and even position sizing. The best part, this code is of course absolutely free and you can fetch it from our GitHub. Details below. Let's get to it. There's a couple starting points I would like to make. First, I'm presenting this code using a Python notebook, but I've also included a standard.py in our GitHub. You will find all the necessary information and links in the description down below. And of course, if you have any questions about this code, feel free to put them in the comments down below or join our community Discord. Your feedback is always much appreciated. The second point I want to make is that the point of this video is not to present a fully professional Python code, but rather a pedagogical code that somebody who is not an expert in Python will be able to follow without too much trouble. Note that this is why I chose to create this code in a very linear way, where I follow the logic of a backtest step by step, rather than splitting the code in several modules as you would do when you create a more professional code. Okay, enough chitty-chatting. Let's get started with maybe a few words on the packages we're using. The code uses the NumPy package for a few array and mathematical computations. Then, as you might have guessed, we're using the famous pandas library to deal with our data. And of course, any backtesting code must come with a nice plot of your profits, and that's why we use the matplotlib library. Here, TA stands for technical analysis, and the TA library is a brilliant library in Python to compute all your favorite indicators. But of course, you're welcome to add any other library that you like. And finally, we're using the Binance client to download the historical data about the asset we want to use. But don't worry here, you do not need to have any account on Binance. You don't need any API key, etc. to download the data. Now, the first thing we need to choose are the characteristics of the backtest. So the asset we want to trade, the period over which we'll do the backtest, the portfolio details, etc. The first characteristic you need to choose is the symbol you want to trade, so the base currency and the quote currency. Then we go into the characteristics of the data that we're downloading, therefore the time frame you want to trade on, so whether it's a daily chart, an hourly chart, a minute chart, whatever. And then we have the date of the backtest. Here there's a little subtlety I need to point out. You can see that I made a difference between the starting and ending date of the backtest, which as you can see is different from the starting download date and the ending download date. Why is that? This is quite important. Typically, when you're using indicators that are recursive, in the example that I chose here to illustrate the code, a few of the indicators are exponential moving averages, and you know that these are indicators that are computed recursively, meaning to compute the exponential moving average at time t, you need to know the exponential moving average at time t minus 1, etc. So for your computation to be valid, you need to start computing the exponential moving average way before you actually start using it in your backtest. So here an example that I'm considering, the backtest is over 2 years. So from the beginning of 2019 until the beginning of 2022. But I chose to start downloading the data 1 year before. Okay, moving on to our portfolio. Here there's a few things we need to choose. The first being the initial capital you want to start with, given in the quote currency. Then here you have the exposure. This corresponds to the position sizing you're choosing. So a 2 here means that at each trade you risk losing at maximum 2% of your capital. But if you don't feel like doing that and you want to use 100% of your portfolio for each trade, then you can just set exposure to all, as I've commented here. There's a little subtlety I need to add here. This computation of the risk-adjusted position size requires you to give a stop loss. I'm linking a video in the corner if you need to learn more about the art of position sizing. But if you're testing a strategy that does not include a stop loss, then the code is built such that this number will become directly the percentage of your portfolio you engage in each trade. In other words, if you write a 50 here and you don't have a stop loss, that means at each trade you will enter with 50% of your total portfolio value. Okay, let me put back 2. Then we have trade fees. These are crucial to produce a realistic backtest. So here you give the number in percent. And finally, here you give the leverage you want to consider. The last inputs to consider are a set of ignores that you see here. And for example, if you want to backtest a strategy on the spot market and not the futures market, you could choose to set this to true to ignore shorts. Or maybe during your testing, you want to ignore shorts or ignore longs. So you just need to set those to true. But also, depending on your strategy, you might not consider a take profit or a stop loss or an exit condition. So that's why I've allowed the possibility to have each of these turn to true or false, depending on what you're doing. Here in this example, I'm considering the full possibilities with everything taken into account. Great. Now that we've set what we want to do in terms of backtest, we need to download the corresponding data. For this, I've created a simple little function here. There's a few things I want to point out. First, when you download the data from the Binance client, you will get a ton of information, not all of which you will need in principle. So what I do here with this drop function is to keep only the timestamp and what we call the OHLCV data. Here's a little conversion because the timestamp are stored as a number. So here I transform them into a intelligible date format for us. And here's some more conversions because that data is stored in the form of a string and I want to convert it to a numeric number so we can deal with it. Anyway, I've run the previous cells, so I can just run this one and then we can run the second one so we see what comes out of it. And there we go. We have our 3-year daily data for our BTC USDT pair. Nice. Now we can establish our trading strategy. So fetch the indicators we want to use, define the trading rules, the entry, exit conditions, etc. So all the indicators must be computed in this function. I've put the URL of this TA library in case you need it. But of course, here you're welcome to use any library to compute your indicators or even yourself, provided that you follow the logic. And the logic is that an indicator needs to be computed and added as a column of the data pandas data frame. You can see here that the example strategy that I'm using to illustrate this code uses a fast EMA, a slow EMA, and then I use a simple moving average as a trend indicator. This will tell me when it's time to enter as a long or as a short. I also consider a momentum indicator, the famous RSI. And finally, in this example, I also use the ATR to compute my stop loss. I've also added other examples to this list. So for example, the MACD, but I'm not using that in this particular strategy, and also the well-known Bollinger Bands. By the way, I've coded quite a cool and free trading bot that uses Bollinger Bands as its main indicator. I'll link the video up there in case you're interested. Anyway, let me run this cell and then we can move to the next one. So the computation of these indicators needs to be added to our data frame. And this is why this compute indicators function is considered here in the prepared data. In other words, what this prepare data function does is to take the OHLCV data that we've downloaded, make a copy of it, to that copy add the computation of the indicators. Then here it makes sure it only selects the dates for which we want to do the backtest. So that's why here you see the starting date backtest and ending date backtest. Remember the little subtlety between starting, ending download date and starting, ending backtest date that I mentioned earlier. And finally, you can see this drop NA function here. And this is indeed to protect yourself from using data where the indicators have not been computed properly. Let me explain. Let's say, for example, that you were using a recursive indicator, but you forgot to add enough past data. What will happen is that the TA library will return nonce where it couldn't compute the indicators properly because of not enough data. So what this line here does is to drop all the rows where those nonce would be. And let me also mention at the end, when we're printing and analyzing the results of the backtest, the true dates on which the backtest was done are displayed. And therefore, you can compare if those days match the starting date backtest and the ending date backtest that you chose. And if they don't match, then that means that you haven't downloaded enough data and you can change that and rerun the code. Let's run this cell and then I'll run this one so we can see what comes out of it. You can see that our indicators have indeed been added to our data frame. And you can also see that we've removed a few of the past rows, the ones that we didn't want in between the download starting date and the backtest starting date. Okay, time to get serious and see how we can implement the strategy rules. This might look a bit repetitive with all these functions, but I wanted to separate clearly each rules to make it simple to change them as you want. And also note that if, for example, you chose to not use shorts in your strategy, you don't even need to change anything here. You leave it as it is and the code will work. As you can see here, these rules uses the row of the data. In other words, you might have guessed that the big backtest function that we'll see later, what it will do is to simply loop on each rows here. And as it goes, it will either enter or exit the positions. So you understand here that this condition checks if it's a good time to enter a long, this one to exit it, this one will compute the stop loss level, and this one the take profit level. Here you have exactly the same, but for the shorts. You can see that I've chosen a very textbook strategy to illustrate this code. So for example, to enter long, I need the close value to be above the trend, and then I need the fast EMA to cross above the slow EMA. And note that I simulate the crossing using this row larger than this one, and the previous row smaller than this one. That's why you see that I consider two arguments in this function, row and previous row. Let me not forget that I also consider an extra condition. I make sure that the RSI is not in an overbought situation when I enter the trade. Then quite logically, I've considered the exit of the trade to be the opposite crossing of the EMAs. Then for the stop loss level, I went for a pretty standard calculation where it is the entry price minus 2 times the ATR. And then for the take profit level, I've also considered a pretty standard convention where I just consider a risk reward ratio that I've set to 4 in this example. Anyway, these choices are really the ones I made just to illustrate the code, but this here is entirely up to you, and that's where you can really implement your own strategy. Let's not go through the shorts, they're exactly the same, simply reversed. Let me just run this cell quickly, and this one as well. Perfect. Now we are set with our strategy and we're getting to the core functions. This is, in other words, all the machinery needed to run the backtest. In principle, you won't have to fiddle with any of this. It is designed to work with whatever choices were made before. The first 3 functions are simple calculators. So the first one is to calculate the position size. The second one is to compute the liquidation price. And the final one is to compute the P&L of each trade. 2 things I want to point out. Here in the computation of the liquidation price, I consider a standard approximation. In truth, the proper calculation of the liquidation price really depends on the exchange you're considering. So if you ever need to make this more specific, this is where you need to implement things. The other thing I want to point out, you can see here that the calculation of the P&L is the pure P&L, so I don't consider the trading fees at this point in this function, but they will be considered in the backtest function. So let me run this cell quickly, and then I can run this as well. You can see that this cell is a function that records the orders. So this is simply to track what happens each time there's an order. So therefore an opening or a closing of a trade. And it stores the order in a little dictionary and also gives a print to summarize what happens at each order. Okay, now we get to the biggest function of the code, the run backtest function. So it begins with a few variables that need to be initialized before you start running the backtest. So before you start doing this loop over each row of our data. You can see here that I chose as a price the closing value of the row. Some people might want to use the open. This is up to you. So you would actually have to change this to open and also consider things accordingly in the rules of your trading strategy. The first thing that we do in the loop is to check if it's time to close a position, so whether it's a short or a long. You might think this is weird. You're starting the backtest and you're looking whether it's time to close a position, but you haven't even opened them yet. This is indeed weird when you start the backtest, but note as you're going through the rows, you might have opened a position and the next row you close it, and at the same row after closing this one, you open a new one. Say, for example, you close a long, but it's time to open a short. Well, you need to close the long first and then open the short here. So that's one reason. Another reason, maybe you have hit your take profit, but for some reason, all the markers are still green to enter a new position. So therefore, you want to first close because you hit the take profit and then open a new long here. So you get now why logically you look for the closing of a position first before checking for the opening of a position. These cases that I just mentioned might not happen often. It really depends on your strategy. But I wanted the code to be general, so it should be able to capture these cases if you have them. Anyway, let's have a look at how the closing of a position goes on. The first and very important thing is to check whether during this candle your position was liquidated. So this is what happens here. And notably what will happen is that you will have this warning printed and then the code will stop because of this exit. Then if no liquidation was reached, it checks if either of the three possible exits were triggered. So whether the stop loss or the take profit level were reached, or if the exit condition was triggered. Then technically speaking, each of these are simply an exit. So what happens in each of them is the same. First, you compute the pure P&L that I mentioned earlier with that function. Then I compute the trade fee. And using this, I update the value of my wallet. I store properly the order to keep track. And you see here that I mentioned that in this case, the exit was a long stop loss exit. And finally, I say that since I've exited my trade, there's no longer a order in progress. And just to mention, this little piece of code here is to compute the last all-time high, and this is important to compute the maximum drawdown. Then the same thing goes on for the shorts. And finally, we get to the entering of the positions. Note here, for example, to enter a position, you need order in progress to be equal to none, because in general, it doesn't really make sense to enter two positions at the same time. Say, for example, you have a long and a short going on at the same time, might be a bit weird. So after this, to enter the position, you must satisfy the entry condition. You see here, we're discussing the case of a long. So if these conditions were all satisfied, it will now change the order in progress to long. Then if you've considered these possibilities, it will compute the stop loss level and the take profit level. After that, it will record the entry price as the current closing price of the row. So that's why we have price here. Then after this, it will compute the position size. So using the position size calculator here. Then the actual amount of your trade will depend on the leverage. So if you've chosen the leverage to be 1, well, it will be exactly equal to position. Otherwise, it's position times the leverage. As usual, very important, we keep track of the trading fees and therefore the quantity of the token that you've bought or sold in the case of a short when you enter this position is this amount where you deduce the trading fees. And I divide by the entry price to convert in the base currency. Here's the computation of the liquidation price. And here also we update the computation of our last all-time high for the computation of the drawdown. Finally, we update the wallet. So if we've entered the position, our wallet is reduced by the position amount. And again, our record order. Okay, no point going through the short. The logic is exactly the same, but for a short, obviously. And then finally, we want to store the important information of the backtest. So the realized P&L, but also the unrealized P&L, the hodling value of our initial capital, and the drawdown. Okay, and what you can see is that this run backtest function returns our data frame and also our orders dictionary. And that's it for the day. We are all set. We can finally run the backtest and look at the results. But first, don't forget, this is not financial advice and trading is risky. Anyway, let's go. Let me first run the backtest function cell, and then we can come here and finally run the backtest. And you can see it ran quite fast. There's not so many trades in the end with this example. You can notably see that there were some long entries and short entries and exits, a short TP here, a short SL here, etc. You can note here the price at which the trade was entered or exited, the date, the amount that was considered when a position was entered. So that's why on the entries you have a number but a 0 on the exits. Here I record the P&L. Note that at the time of an entry, there is a negative P&L. That is because in this case, I want to record the fees because in terms of realized P&L, when you've entered the trade, you've lost a bit of money because of the trading fees. So that's what you see here. Now here for the first trade, you see that the exit, we have a P&L of minus 56.43. That indeed, unfortunately, means that our first trade was a loss and that we lost this amount. Note that this P&L here is the leverage P&L because it corresponds to the difference between entry and exit price times the amount of token that you bought. While here the tracking of the wallet is not leveraged. This is really the money that you have in your portfolio when an order is placed. In other words, if we see the first example here, after the long entry, our wallet went down to 832 USDT, meaning that our position size when we entered the trade was of approximately 170 USDT. And then this position was leveraged with a leverage of 5 because right at the beginning, if you remember, we set the leverage to 5 here. Okay. So what you see here is to track what happens as we go, but of course to analyze the backtest and make a judgment about the quality and the performances of the strategy, we should look into more involved metrics. So this next cell here gathers all the computations and the printing to make a thorough analysis of the backtest. Now, I don't want to go through the details of all of this together. I'm a bit afraid you'll end up getting bored and fall asleep. I think what is more important now is that we actually run it so we can analyze the results of the backtest together and discuss what these metrics mean, etc. And of course, if you have any questions on how this is computed, you're welcome to ask me. Anyway, let's get to the results. So in this first section, I return everything that deals with profits and returns. Note, by the way, this is here where I display the real period on which the backtest has been run. Here you can see the starting balance. We started with 1,000 USDT. Then you can see the final bot balance. So by bot balance, I mean the balance generated by this trading strategy that we implemented. Here I display the final hodling balance. So if you had chosen this hodling approach, and I also compute the net profits. In other words, the profits minus the initial investment divided by the initial investment times 100. Just something to note, be careful in a certain sense to always compare the profits of your strategy with respect to hodling. Ideally, you would think that you want your strategy to do much better than simply hodling. But the fact is, you cannot guess what an investment is going to do. Turns out if you had bought Bitcoin 3 years ago and you held on to it, you would have gained much more than doing this trading strategy. This is what these numbers tell you. But you never know if tomorrow this will be the case. So if you're designing a trading strategy, is because you want to make the most of this uncertainty of what's going to happen in the future. And obviously you want to make the strategy that will make the most of any market conditions. This also reminds me, I haven't mentioned this yet, but you should always know that past performances never guarantee future results. So a strategy that did really well in the past is not guaranteed to do really well in the future. But you still want to backtest because you want to know if your strategy was capable of working with past data, because if that was not the case, there's practically no chance that it will work with future data. And also this way, it helps you understand how your strategy works and therefore also how you could improve it, for example. Okay, let's move on to the second section. That's the trades if you want. So I give you the number of orders, total orders. So you can see that there was 18 sells and 19 buys. So that means by the end of the backtest, there's still an open position. So that gives you a total of 18 closed trades. You see that the win rate of the strategy is around 55%. The average trade profits. So on average, how much does a trade return? Well, almost 12%. Then you can see that within those 18 trades, 10 were profitable and 8 were losing ones. That's what gave us this 55% win rate. I also give you the average of winning trades versus the average of losing trades. For example, for certain strategies, especially ones heavily relying on trending indicators, it's quite often that you will see quite a low win rate. But in this case, what is really important is that the average of winning trades is way above the average of losing trades in absolute value, if you want. I also note the best trade and the worst trade here. Then we get to what I call the health of the strategy. So a few metrics to help you judge how good or how safe, how robust the trading strategy is. The first one, which you probably have heard of, is the maximum drawdown. So you can see that this strategy with a leverage of 5 had a maximum drawdown smaller than 20%, which is not so bad in the end. It has a profit factor of 3. This corresponds to the gross gains divided by the gross losses. And then what you call the ROMAD, or return over maximum drawdown. This 30 that you see here actually means that there's 30 times more profits or returns than the amount of maximum drawdown. By the way, if you would like to see any more metrics computed here or any extra information, please feel free to let me know. I'll be happy to add things to the code. And then finally, we get to the trading fees. So you see here how much money you've lost in fees, the biggest and the average. By the way, if you want to trade with some discounts on your trading fees, check the description down below. You can get some nice lifelong discounts on all your trading fees with our registration links on different crypto exchanges. Anyway, and finally, a little plot. I should have mentioned it probably when we were talking about the profits, but I forgot. So this plot is the plot of our net profits of the strategy during the backtest. So here is the net profits in terms of percentage, and here in terms of the quote currency. Here I'm basically plotting the unrealized profits, meaning what is the value of your total portfolio at each step of the backtest. So this is why you see some alternation of some flat regions and some little peaks, etc. What this tells you is that a flat part is when there's no position open, so it's all here in the form of USDT, while when it enters a position, it converts the amount you've attributed to that position in the base currency, which fluctuates with respect to your quote currency. For our example, in the end, the profit curve doesn't look too bad. It did crank up slowly with some regions where it traded a lot, especially here, and some regions where in the end it didn't do much. Note, however, that for a trading strategy to do only 18 trades over 2 years is maybe a bit low in terms of number of trades to properly judge the strategy. But this also means that this strategy is more of a long-term plan rather than a high-frequency trading strategy. Something I need to mention about the plotting here. So I mentioned that this is the unrealized profits. But if you're interested in having a plot of the realized profits and the hodling value, you can just turn these into trues and it will do the plot automatically. All right, I think we've covered a lot in this backtesting tutorial today. And a big thank you for making it up to here. If you found this content valuable, please do me a favor and hit that like button and consider subscribing too. Got any questions or suggestions? Feel free to drop a comment down below or join our community Discord. Until next time, take care and happy trading.